All right, guys. So Roy and Kitty's back at it again. Here we go. 69 yesterday, 30.69, and tonight the top was 27.69. I don't know how many times we got to show you this. That it's always ending in 69 on the market. I think it's already happened like 15 other times. But the real thing I want to get at is this. This is so disingenuous of this guy on Twitter. I was going to leave him alone. His name's KabraxFX. I guess he's a fundamental investor, and he tries to give all his credentials. And this is like how the narrative gets flexed, guys. I want people to understand that if you read this stuff, you have to know how to look past it. So let's go ahead and read what they wrote. They said, I think it's great to be critical. However, tracking the fundamentals of the company, there's quite clearly a turnaround present. If this is the level of trading we have without any transformation, can you imagine what the price would be if they dropped news? Exciting. So he comes out and he puts out, I don't attribute seasonal buying pressure to be substantial indication of a turnaround. Their gross margin continues to shrink and only showing higher levels of profit from interest income. This is such a misleading statement. In the same token that he puts, he doesn't attribute seasonal buying pressure. Maybe he wants to be oblivious to the fact that retail companies in general can't just they can't just forget about Christmas. You literally have to factor that in. And if you study the company, traditionally you'll understand GameStop quarter 4 does less profit margin, less gross margin than quarter 3 and 2. But I'll leave it there. If you look at the margins itself, there's a reason why he didn't show quarter 1, because it was at 27%. But how about we do the whole year? Like, you're not allowed to do this. Take it into a window of 3 quarters and tell me there's no turnaround story happening for GameStop because they fell from 31, 29, and 28. Like, do you know what's happening with the company? Here, I'll show it to you, but don't act surprised when you see the profit margin going up, operating margin going up, everything's increasing, yet you decide it's going to be something else. I said, you go ahead and post the quarter margins, all while claiming not to be swayed by seasonality, as if Christmas doesn't exist for the rest of retail. Now, here's the true number. The true number on the trailing 12 for gross profit margin, and you will see that since, 8 quarters ago, it's gone from 23% all the way to 29%. 560 basis points, and you're totally wrong, right? Like your argument is null and void because it takes a full fiscal year to understand retail. Yet GameStop's transition and pivot is totally separate. Like, we could go even deeper and we can look at it from a whole nother standpoint. We can look at GameStop just from the standpoint of income itself. You want to come in here and say they're not profitable. Like, I read all your tweets, dude. I read them all. And they're unfortunate. And you really blocked me. You actually blocked me because you didn't want no smoke, right? And I get it. You don't want the smoke, but at the same time, you're pushing out companies right here, and your index here, and it says what a company like Root with a 800 PE ratio for 4 PE ratios. Dash makes less money than GameStop. Profit. There's no profit to be made at Dash. So let's have this conversation, though. Let's get fluid with it. You just can't post stuff and then it's fact, right? So, let's talk about revenue. You say, well, they're a company that doesn't operate and make a profit. Here's operating income. If you can see they used to lose $380 million, now they lost 17. Operating income, right? So what would you say to companies that actually make a profit via the business, the traditional business that you see? You don't think the money actually counts towards profit itself, the bottom line of what they actually produce and make? I encourage you to go look at Berkshire Hathaway's balance sheet. But that's like telling Costco they only make a profit because they have membership fees. Yeah, it's part of the business model. GameStop's cash is making them money, right? That gives them value. But they don't have debt. So any share offering they did to raise that cash is actually value to the shareholder. And that's all that really matters at the end of the day, equity to the shareholder. So the greatest thing about GameStop is you can see the transition and or the pivot, right? Or they're headed towards the right direction from negative 380 to positive or negative 17. That swings easy when you see the interest that they've made from none at all to $163 million, which is actually going to go up all the way to 220 next year. And I'm just ballparking a number at 4.8 billion cash. They have 6.2, almost 6.3. But as you look at GameStop and they actually make more money than anything, like that's what companies are graded on, you're still trying to grade them at the till. And that's not how you grade this company. It's not just a retail company. They have so much cash that it warrants value. I mean, it's one of the metrics that you can measure, right? I'm measuring it right now. Let's go ahead and look at the cash. They went from 2021 to have $500 million. Now they have 4.7, which is now 6.2, correct? Look at their assets, $5.8 billion in assets versus current liabilities of 600 million and total liabilities of 945. That's right. Current ratio, assets minus liabilities, current ratio is almost 5x, 4x. I mean, they're really doing that well, 6x. So that's why when I look at book value and I see GameStop headed in the right direction, I go, okay, so they have all this shareholder equity at 4.9 billion, and their book value is there at $11 a share. Why aren't you giving it value? Because you invest into companies like Root and or Dash that trade at 10x on book. Hell, HIMS trades at 10x on books. TMDX trades at 10x, 14, 13x times book. They're all evaluated companies that are grossly overvalued, yet you pump them. But when you understand the fundamentals, I'm going to give you another fundamental for GameStop. As I look at them and I look at their balance sheet, and it makes me think, makes me wonder, like, this is a company that has zero cash burn. So they have zero cash burn. They actually make a profit, and I don't care if it's via interest or not. That's part of the business. You know, it's the greatest thing that they don't tell you whenever you're like evaluating companies. They don't tell you. They're like, hey, you know, if a company made $5 billion cash by raising it, by doing ATMs, somebody actually thought that company was worth that money, which they are. That increases the value. Wall Street doesn't want to give it value, so do you know what Ryan Cohen's doing at GameStop? He's giving the company to the street. He's saying, here, I'm going to offer shares, and I'm going to show you, Wall Street, that they do think it's worth $28. They do think it's worth $29 on a bond deal with the 30% premium. It's okay. You know what you see in the markets today? You see this, it's like a rowboat. You see, we're rowing boats, right? And we go too high, we're going one paddle, and we go way up high. So then they actually have to use the other paddle and bring it on down. That's your delta neutral. We're just headed in a direction. You guys want to pay? You guys want to pay to play? You guys want to take it at the top of it versus the bottom of it? You're buying what? Price action, whether it goes up or down? Or are we buying direction? Because it's only going up and to the right. Hedge your positions. Cover your short. Do whatever you want to do, Wall Street. But when guys like this claim they're fundamental investors and they care about fundamentals, then you're missing the bigger story. Whenever you want to evaluate an investment, feel free to go ahead and pull back the 10Ks and 10Qs from 4 years ago, from 10 years ago, and understand the direction. Okay? Not the price action. You really got to learn how to invest, man. It's embarrassing, and you call yourself this fundamental investor. Hey, I have no accolades to my name. I have no prefixes, okay? No tags on the wall. I didn't do anything special for this. I just woke up and decided that I was going to learn how to evaluate investments the right way. My portfolio up 177 this year. Yours isn't. You know where to find me. Oh, I forgot my best part. Punk